ETF demand elevates Bitcoin above 69,000, and we have over $1 billion in short liquidations looming above. Guys, things could be percolating for a big-time volatile move. So let's get into it. Hey guys, it's Keith Allen, and as you can see, Bitcoin has made it above that 69K level. It's an area I've been eyeing for months and months and months. We finally have another move above there. We've had literally dozens of attempts since like March, right? So the question now is this going to be a sustainable move? Is price going to stay up above here? Are we going to validate an RS flip and move up into all-time high territory? And to get some clues on that, we're going to look at some things because there's a lot impacting the market right now. And so first thing we'll do is we'll take a peek at the candle chart, see where we're at. We'll look at liquidity in FireCharts and see how things seem to be positioning. And we're also, of course, going to look at the what I believe are the catalysts for this move and what might be coming next. So let's start over on the candle chart here. Let's go to bear with me. I'll find it. I promise I'll get there. I need to go here to this one, and we'll do it like that. Okay. So as you can see, we had a big candle yesterday. What was this? I guess it wasn't that big. 2.5% candle that rises Bitcoin above that 69K level. Now, what's important here is that we've retested this 21-day moving average 1, 2, 3, 4 times, and then we got that good pop up above. You know, if you're new to the stream, welcome. Glad to have you here. If you've been around for a while, you know that we've been talking about this level. It's the 2021 top. It was the all-time high for over 2 years and has been just really strong resistance. We got to pop over this to make our new all-time high at 73,800, and that's just made things confusing for a lot of the market at this point. So obviously we've had breakdown after breakdown from that level. All of these wicks below were indications that things would break down, and they did. And so now we have our first candle in a couple of weeks anyways, with a chance to live its life above this 69K level. Why is that important? You're hearing people talk about 70K, 71K. Yes, those are technical levels as well, right? 70K personally for me is more of a psychological level. This 2021 top, no question in my mind, it's a technical level and it's been there for years. In terms of 71.5, well, look at where we are right now, right? Look at this line right here. That's at 70,500. If we get up into this level here, you're about 71,500. And look at the confluence here. Let's just draw a little line, right? From 71.5 is what right about. Well, I'll get it in place and then we'll adjust, right? 71.5. That's close enough to the pin. And bring this one down close enough to the pin. Okay, so lots of confluence in this range here. Very strong technical resistance. What lies above that is really impressive. So let's move over to the candle to FireCharts and look at liquidity here. You see liquidity strengthening above this level, right? So here's 71. This is at 71.5 range, and look at this, super strong, 57 million sitting right at that level. More above that. In fact, if we look at a liquidation chart, this is where it really gets interesting. You know, there's been news of open interest being near all-time high levels, and let me head over to my to the Black Knox Twitter account where I've saved some of these things here. If you're not following Martin, give him a follow. He's a great source of information, trusted source, and a trusted partner. He definitely is in tune to what's happening with open interest, and he says we're near all-time high levels here. And that basically means there is a bunch of unsettled derivatives contracts that are percolating and ready potentially to get squeezed here. And the reason I say there's a potential liquidation hunt to the upside is look at this chart, right? Here's a liquidation map. And according to Willy Woo, there's over 1.5 billion in liquidation sitting up in this range between where we sit now and like 71K and 75K, right? So when you see these these hot over leveraged areas, you do expect them to at some point get liquidated, right? Like prices dipped down many times. Why didn't more of these guys close? That's kind of surprising to me. Well, I guess they thought we were going lower. A lot of us did, and that hasn't materialized yet. So now they're in jeopardy of getting liquidated once again. And if that happens, that's going to be ugly. A lot of money is going to be lost. I know a lot of people have been trying to short this level, but now I don't know. I have mixed emotions, right? When you see this, it's ripe for the picking. But when you see the liquidity here, it's going to be hard to get there. And maybe some of those guys who are over leveraged on those big shorts might be the ones stacking these asks here to keep price to basically protect their leverage positions and hopefully try and knock price down for them. I say hopefully, depending on your perspective and your bias, whether you're hopeful of that or not. I personally always looking for an opportunity to buy lower. So in terms of where we sit on this whole 69K thing and how we got here, we're watching the liquidity move in the order book here, right? And so the fact that we have liquidity moving up from 65K, that's good, up to the 67K level. We even had some come into the 69K level yesterday. And that's the first time that's happened, right? We haven't seen that real strong support at that level. And we still don't have real strong support, but at least something came into this range here yesterday after things moved up and it was cleared out. Was wondering if it was going to replenish. Yes, there is some liquidity here, but there's certainly not a lot. There's not an amount that makes me feel comfortable, I would say, right? You want to see a big, bright wall, right? And that just hasn't materialized yet. Now, how do we get here? So yesterday, a few things kind of materialized for me. One of them was I saw some asks getting pulled and some moving up, and that was an indication, right here, this was a pull. I call that a roof pull when ask liquidity is removed. This is a roof pull. Well, actually, this one looks like it actually dropped down after the fact. But when we see ask liquidity leaving or lifting, that is an indication that price is going to follow, and it indeed did. Now, when we have additional forces at work, for example, economic data yesterday that gave us maybe a bit of a tailwind. Let's see, Tuesday, we had JOLTS and Redbook data come out. This basically says that year over year, the Redbook year basically says that year over year same store sales for about 9,000 retailers across the U.S. was down from the previous month. So still growth, but growth depreciating, right? 5.8% versus 6.3%. This is not necessarily good for the economy, but it is good for Fed watchers because these are the kinds of things that the Fed is watching to determine whether they're going to stay paused, whether they're going to consider another hike later this year, or whether they're going to cut. And then next to that, JOLTS job openings basically means there's been a reduction in job openings here over April. And so that means a slight tightening of the labor market. So this news came out and we saw price move up a bit more. As you can see, so that was about this time probably. And then we see price moving up. Now the real boost is coming from ETF demand. Yesterday was the 16th consecutive day of positive inflows here in the US, and it was a massive one. Almost $887 million in BTC spot ETF inflows for the bunch, anchored actually by Fidelity this time around. Big day for Fidelity, big solid day for BlackRock. A small day for Grayscale, but not being negative is positive in my eyes for Grayscale, right? So all in all, a very big day. And why a big day? Well, we also had a big day for Hong Kong ETFs this week. And today, it's my understanding that Australia Bitcoin ETFs hit the market today. So that all kind of speaks to the narrative of increased demand from ETFs. Now, how can you be sure that this is um, really what's driving the market? Well, it's not just what we see here, right? What is the exchange that's the custodian of record for most of the U.S. ETFs? Coinbase is, right? So let's look at something that I found this interesting because when I was doing my analysis, I use the Bitstamp chart um, for my really my core analysis for a lot of reasons, mostly because it has the most historical data. Um, and what I noticed here was there was a decline in volume, and I'm like, man, you see a move like this on declining volume, that's not what you want to see. But if we move over, so then I started looking at other exchanges, right? So then I went to the mothership, if you will, and looked at Binance. And Binance shows that we were relatively flat between the 2 days, higher than the average, but flat between the 2 days. And then I went over to Coinbase, and I have a Coinbase chart right here. And guess what that shows? That shows that yesterday was much bigger volume than the day before. And so this to me was more evidence that this big push coming from that ETF demand stemmed from Coinbase. So that just gives you a little bit more fuel for the fire here, right? So that's basically what I'm looking at in terms of putting the pieces of the puzzle together. We do know that we have these looming liquidations overhead, but the question is, do we have the support to hang in this range? Do we have what it takes to stay above the 69K level and consolidate perhaps here for a bit? I mean, in my opinion, this would be a very strong move. If Bitcoin can stay above the 69K, consolidate a little bit, gain some strength, start to see more bid liquidity come into this range above 69K to give us some confidence that this is going to hold. Because I'll tell you what, when I see things rolling off the top here and sell pressure picking up, then I have concern. This is a lot of resistance up here, and those liquidations are attractive for sure, but they seem to be protected for the moment. This, of course, can change in a moment's notice. We could see a potential roof pull here at this level, and that opens the door to a move up. We could see a big block of bid liquidity appear here above 70K or above 69K, and that could give us a boost. But until that happens, until one of those scenarios play out, or we just see massive buy pressure coming in, I think that it makes sense that we might consolidate here for a little bit. And I'll tell you why. Aside from what I'm seeing here in the charts, we have some other data coming out this week that could give the market reason to just be kind of chopping this range just for a little while longer. Of course, that comes in the form of more economic data. Tomorrow, we will see jobless claims. And this, of course, is another one of those bad news equals good news scenarios where Fed watchers want to see an increase in jobless claims. And then on Friday, we have non-farm payrolls and unemployment rate, which is now hovering at 3.9%, still historically low, but we are one tick away from a four handle. And if we get that, I think the market will get excited. Yes, that speaks to bad economy and potential for recession, but it also speaks to less likelihood of rate hikes and more likelihood of rate cuts coming sooner than later, potentially this year. Now we'll go beyond that, right? Of course, same thing with, same info we're looking at on non-farm payrolls, et cetera, et cetera. But going into next week, we actually have the FOMC meeting. I believe that is like on the 12th or something. Let's take a look really quick. I think we have the FOMC rate decision meeting, and of course, Fed Chair Powell's comments coming after that. Those are always good triggers for volatility. At least typically they are. And so this is on Wednesday, June 12th. So that's a week from today. More reason for the market to just kind of cool its heels here for a moment and wait for things to develop and see if we get some clarity out of this. Somebody posted yesterday that they thought maybe we would see a rate cut here at this meeting. And I would say that seems I'm no economist, right? So take it with a grain of salt, but it seems very unlikely that that would happen this soon, right? They're just seeing, at the last meeting, they said progress had stalled. They're starting to see an progress resume here. But are they seeing enough? Chances are they might want to wait until the next meeting. Um, you know, I guess we'll find out, right? No sense in speculating. Let's just wait and see. That's really what it comes down to, is being patient and waiting for these things to develop. Jonathan, hey, thanks for the comment. He says good economy because of today's Fed data means no interest in a rate cut today till next week. The meeting is Wednesday. So yeah, I don't think we're going to see a hike or a cut at this meeting. But I think we will be listening for what Fed Chair Powell's comments are telegraphing. He's always good at really kind of telegraphing his sentiment there. So we'll look forward to that and see how things play out from there. Let's get one more look at FireCharts to see if we see any movement between our last comments here. As we see that they are indeed trying to go after this level here again, but I just want to see more bid support coming into this range above 69K to give me some confidence that this is going to hold. Even if we have this ETF demand coming in today, and of course Australia ETFs hitting the market, where is that bid support? Right? There's some, but not as much as I'd like to see for sure. So the fact that this is moving up is positive, but I want to see more above the 69K level. And in terms of the short term, let's see what's going on here. So you see a bit of a roll off of off the top here of where whales began selling again, and at this point, a little bit mixed. Buying dips is certainly a game that they play. They buy dips, they sell rips. And so when you're dealing with big money, you have to have enough liquidity to buy into to not have slippage, right? So when you get into these thin zones like this, above the 71K level, it's difficult to make large whale-sized trades. Whereas once they get up against this wall here, they may start buying handily because they could get through it pretty easily. There's not a lot there. Actually 12.5 million here at 71.5. And then you can see it's just stacked here, insulating 72 with another 12.5 and another 36, 37. And this starts getting big. And hard to break. And the fact that you see more coming into this range, right? So brighter colors equals more volume. So the fact that you see this developing and growing is a sign that it's building strength here. Resistance is getting stronger. So whales are going to have to do a lot more, and we're going to have to see more bids coming into this range to give confidence that we can actually break through this. I'm going to wrap it at that, guys, for the day. Obviously, I'll stay in tune to the charts for the day, and if I see more developing, I'll do my best to keep you guys updated and in tune to what's going on. Zoom out with one more wider shot, maybe, and zoom out with one more wider shot and give you another view just for the overview to get kind of a macro look. That is, if my internet is not going to crash on me. Candle chart showing that rolling back off. What was the high today so far? Did we tick 72? Not quite. High of 71,379. So that's 71.5 still holding very strong here. And so that's really what I think is going to be resistance. So I would be very careful and cautious about buying into what could potentially be a local top here. Not a lot of room here. So look at your risk reward of where you might go here if you're opening a position here at this point. I'll wrap it at that, guys. If you like the content, please do me a favor, smash all of the dang buttons, especially the subscribe button, and share these streams with your friends and followers. I appreciate that support that you guys are showing me, and I love the comments. So please keep them coming. I engage with each and every one of them. Gonna wrap it right there, guys. Have a fantastic day. And as always, trade safe, my friends.